with the sun up.
Big difference.
Sun is here when we leave.
Huge. That's the biggest.
Big tennis match here today. It's been a couple weeks since you, me, and Clink have gotten on the court. Is there any, what's like a fun nickname for a tennis court? Because there's like the pitch in soccer.
Yeah, the court.
Court,
that's the same thing. That's the same thing as saying the pitch. The field.
All right.
Yes, yeah. You can call it an arena. There's not really stadium seating.
And Wimbledon is going on right now?
Oh, yeah. Big time. We still have an American hero in it. Taylor Fritz. He plays...
Oh, good for him.
Tomorrow. Semifinals tomorrow.
Semifinals tomorrow. He's playing... Alcatraz.
Yep. So, not looking too good for our American king.
That guy's he's the best? Alcaraz?
He's ranked second, but he's my personal favorite.
Okay, who's ranked first? Djokovic?
No. Your boy, Yannick Sinner.
Oh.
Who's playing Djokovic.
Redhead Italian.
Yep.
That is my guy.
Ding, ding, ding.
I have not seen him play a single point. What do they do?
Correct.
What do they do in points?
Correct.
But they're 15. Each point is 15.
Well,
it's like a touchdown.
Except when it's 10. It goes from 30 to 40.
15, 15, 10. And then no more points awarded.
And then we're done. and then it's 1.
But it's win by 2.
Correct.
Okay. Who came up with this?
Some Englishman way back when. But you
tracks.
also you went to All You Can Eat Sushi yesterday. Give me some stats there.
Probably put down like, I would say 25 to 30 pieces of nigiri.
Personally.
No?
Keep going.
And then we shared, I think, 3 regular, like, maki rolls. So we went very roll light.
Okay. Yeah.
And very
That's the value play.
nigiri heavy.
A lot
and
of
then,
fish.
of course, if you're going to go to All You Can Eat Sushi, and if they have mochi and tempura Oreos on the menu, little life hack. It's like going to Jamba Juice and ordering the pink Starburst. You put the mochi on top of the tempura Oreo.
Here's a life hack for you. You can take all the desserts they offer, and
Make
you can just eat them all at once.
Make them into a sandwich. You go to an Italian place, cannoli tiramisu.
You load the cannoli, extra stuffed.
That's right. You put the tiramisu on top of the cannoli. The cannoli becomes a vehicle for further Italian sweets.
I'm actually on board with that.
But yeah, of course, as is Japanese tradition, a tempura Oreo becomes the vehicle for any other sweets you want to pack on there.
Tempura Oreo, they did kind of nail it with that one.
The only
Pretty
thing
good.
is the Sushi Taku has to get their tempura technology in line, because the Oreo, I feel like, should be crisp. Like it, and if
you want really?
Shouldn't it be?
I don't know. I kind of like that.
if you pick it up with your hand at the edges, it like kind of folds like a pizza slice almost.
See, I think it's genius how they transform an Oreo into more of a baked dessert.
Yeah, I guess you don't want the Oreo itself before being any kind of transformation.
Because if I was
is already like pretty harsh.
Right. If
And
I was
so,
just
like, you use
served an Oreo,
Yeah.
then like that's already crunchy.
It's crunchy. And so yeah, you use the milk or the tempura does soften it. Okay. This is why you're here.
No, you have to say it. Say you're right. Because you didn't even say
You've raised some good points. I'll rethink my tempura Oreo assessment, and I will get back to you all next time. What do you want to do today? You wanted to. I think. Did you want to change it up? Didn't you want to do like the study first?
Let's do the
Summertime
study
Glenn
first.
has been doing a lot of studies.
Yeah, a lot of research.
Summer
I've been in the
school.
lab.
Yeah.
I need to get my glasses back on. Back when I was on with Crypto Ryan, he would call me his quant.
Oh,
for
yeah.
For no good reason. I did no good research for him.
If you have glasses and you look like you haven't gone outside,
Right.
you're a quant.
Too bad I'm super tan right now. Yeah, let's get into the study first because we want to take our findings from the study, then hop in the platform.
Sweet.
So let's hop over to the slides. Today we're looking at timing mean reversion strategies in low volatility environments.
This is what we're talking about.
This is good stuff. I still have to work on making my titles perhaps a little less wordy, but this
is the best one you've ever
this
had.
packs a punch.
You're learning like I learned, and like how my
my
father learned before me, that what the people really want is like some of the most specific stuff that you could give them, because in this day and age, people are digesting content constantly.
All the time.
And so, like, if you can give me a mean reversion strategy in Forex for low volatility environments, and then you can also give me a mean reversion strategy for high vol environments, trend following, all these different things, my brain at some point digests the information, and I can go, okay, that market's low vol and it's at an extreme. What do I do? That market's high vol and it's moving through to a new range. What do I do? I love the specificity of it, as opposed to like, here are the returns of this market compared to this other market. So this is great. I'm excited. You are really cooking now.
All right, let's get into it. Background here is it's summertime, and we've seen some pretty boring dollar markets as of late. So went and crunched the numbers on what the realized volatility is, annualized using a rolling 20-day window. And here we've got also the percentile based on, the past year of those realized volatilities to kind of give you a gauge of where these dollar pairs sit historically to themselves. And that low vol column is the currency pair in the bottom 30 percentile of its historic range. So we're seeing some really extreme volatility compressions in those Australasian pairs. I mean, the 6th percentile for Australian dollar and for New Zealand dollar.
Very sad.
All the same.
Very sad vol numbers on the whole. 5 to 6% volatility. It is not like absurdly low.
Right.
We're not talking about like VIX trading in like the 7 or 8 handle. But like it's pretty low. We've seen all of these pairs hit double digits in the last year of trading.
Yeah.
In terms of the realized volatility, that percentile I think is helpful. We'll probably do some work to make that even easier to digest, just because, I mean, what you're actually looking at here with like a 13% there at the top is just to say that the range of volatility for Eurodollar for the last, I'm guessing you did it for the last year, for the last year is like probably 5 to 12%. It's 13% above its lowest volatility reading.
So 87% of the time, the past year.
It's been more volatile than this.
Volatile.
Yeah. And also what's sad is none of these are even above 50. I mean, not a lot of markets with huge swings aside from, I'm not surprised to see that Swiss franc and Canadian dollar are two of the more volatile ones in here, given that they've been bouncing around historic extremes recently. But all right, good backdrop. So mostly low vol, even the high vol ones not above 50th percentile in volatility, and nothing sniffing 10% plus.
And
volatility.
anecdotally, what this calls out to myself and probably a lot of Forex traders is that in low volatility environments, you tend to think anecdotally that this would lead to higher success in mean reversion strategies because you're seeing similar price levels and not much going on. But we wanted to get into the numbers and see if this is actually true, how often, what pairs, and over what time frame. So what we did is we used the past 6 years of price data for 7 major US dollar pairs. We measured the realized volatility, as you saw in the last slide, and broke up this analysis into a low volatility environment, less than that 30th percentile, and the rest high volatility, so above that 30th percentile. And what we did was simulate trade performance using contrarian trade strategies. So if the if the pair hits an extreme to the upside, then entering a short position, and likewise on the other side. And what we did was we used the Bollinger Bands, and we'll get in the platform and show you how easy this is, because we use the default settings for this Bollinger Band. And why we did that is because that indicator reacts to volatility. So those bands, it uses a moving average and then 2 standard deviation bands, and that will actually respond to low volatility environments. Those bands will tighten and likewise expand. So a pretty reactive measure when we're cutting up the volatility environments.
I don't understand how how Bollinger got his name on that.
That's a pretty good deal.
Because he definitely didn't invent standard deviations. And it's
No,
not
that was
like
Stan.
It's not like moving averages are called like the Johnson metric.
No, that guy nailed it.
Standard deviations, pretty well understood in the math community for, I have to imagine, at least a couple hundred years at this point. They've been measuring like, okay, like this is what the thing tends to be, and like this is how far it can kind of move around that current average or mean price. But yeah, I mean, the Bollinger Band there is just a quick way and an adaptive way for you to look at what's a big move in this market. And so, yeah, getting above that Bollinger Band is essentially saying, okay, we're outside of either 1 or 2 standard deviations, which is the equivalent of 68% of the data or 95% of the data. So now we're in rare territory. If you're outside of that band, you're in 32% or 2 standard deviations, 5% territory. So rare territory. And you looked at when we got below the lower band, taking a long position, when we got above the higher band, taking a short position. And this is in low vol environments specifically.
Yeah, actually did it for both because I thought it was interesting. But we used that 30th percentile cutoff, and then we calculated the win rate on any positive P&L over 1 to 10 days. So we broke that out and we averaged it. No stops or take profits here, just directional P&L. So what we saw first is I tested whether this low volatility mean reversion thesis even holds across dollar pairs. And what we see is dollar pairs are actually split. It isn't necessarily across the board that low volatility leads to higher success in mean reversion strategies. But I mean, the clear winner here for that thesis would be this Australian dollar, with the average win rate in low volatility environments a full almost 12% higher than when in high volatility environments.
It's pretty wild. The more these studies that we do, the common theme that we're seeing is that commodity currencies, specifically, Aussie and Kiwi, have been very mean reverting the last several years. You just I forget the other study that you did, but it was essentially, what was it like, looking for like reversals,
right? And
then what was the one before that?
When to get long U.S. dollar?
Yeah. When U.S. dollar's getting hit like it has been this year, which pairs could you have gotten long U.S. dollar in the last handful of years? And it showed a good reversal. And it's been these commodity currencies, this Aussie and this Kiwi. Surprising to see that the dollar-yen pair has shown a good amount of mean reversion in both environments.
Right. Agreed. And especially interesting that the euro, Swiss franc, and Canadian dollar have not only higher win rates in high volatility environments, but that's pushing all 3 of those above 50%. When they weren't in low volatility environments. So
better. Okay, so euro, Canada, and Swiss franc, better high vol contrarian trades, and yen is also in there above 50%. But in low vol contrarian trades, you're looking better with the Aussie, the Kiwi, and the yen there.
Yeah.
Okay.
So let's break this out. Let's keep that in the back of our minds as to which is better for low and high.
Yeah, this is only like 15 to 20 numbers. I can keep those in the back of my head for sure.
Okay, so good thing I've done some color coding. So when I hit you with more numbers, bang.
You love numbers. This is
hopefully you don't have to read all of this. Seriously, you only have to read one per line, and I've even highlighted which pair this is the optimal environment for. So this is low volatility, looking at contrarian plays with those criteria, and which day, how long it would take for you to get out of this position with the most success. And so
this is amazing.
Looking,
you have truly gone too far.
You don't have to read it. All you have to do is see 1 to 10, and all the green numbers, the highest probability, are centered in the 1 to 5 day range.
All you have to do is look at this for 20 seconds.
Not even.
Let it stop hurting your head, because it hurt my head for 15 to 20 seconds. And now I do understand what you're saying, that, okay, we're in a low volatility environment in this study.
Yes.
We are also currently in most of these major U.S. dollar pairings. I'm looking at contrarian strategy, which is what's the criteria for this contrarian strategy? I already forgot. There's so many variables that I can't remember with this friggin' study.
If it touches one of the Bollinger Bands,
okay.
So standard deviation.
Low vol. I got my Bollinger Bands on my chart.
Yep.
Or I'm just thinking about standard. It's the same thing as like euro dollar standard deviation right now is probably like 40 points. And so like when it gets out of, is it 1 standard deviation or 2? Okay.
2.
So when euro dollar breaks out of like a 70 or 80 point move right now in a low vol environment, I'm entering into a reversal position, a contrarian position. I'm shorting it if it's up 80 points. I'm buying it if it's down 80 points. That euro dollar metric here is telling me, okay, there's a positive win rate to that contrarian trade in the first few days.
Right.
And you highlighted the first day, even though the third day has the same win rate. But I guess it is probably better to, if you've got the same win rate, same strategy or whatever, take the profits a little earlier. But it is, the way you can look at that is, okay, you've seen a reversal in this low vol contrarian trade the first couple of days. Whereas you're looking at some of these commodity currencies, and I'm looking at you, Aussie, on the top row, and Kiwi on the fourth row, the middle row there, and you're seeing some of the best win rates actually in the middle. And then actually there's a little bit of a tail with both of those, where the win rates 7 to 10 days out are also pretty positive, so can be a little bit more of a longer term contrarian play in those. Whereas, the European currencies, that euro and that pound, although I don't know if the UK, that was an awkward thing when I was in London. It's like, are they European or not? It's always like UK and euro area, and it's like, all right, I get it, everybody. A little bit quicker maybe on the trigger for taking profits for those. And again, that yen, I'm surprised to see in low vol how mean reverting that pair has tended to be.
Yeah, you nailed it. That maybe the most actionable takeaway here is if you do put on one of those contrarian plays in a euro dollar market and you have or haven't seen success, the study shows less favorable for you to just keep holding on to that.
Yeah.
And it's interesting because when we flip over to high volatility environments, that trend goes kind of out the window here. And so here highlighted in green, the pairs highlighted in green, where this is the optimal mean reverting environment. So that euro, that CAD, that Swiss franc, it could still take longer here, longer than 5 days for those to mean revert. So if you aren't seeing a pop right away, perhaps there is rationale to hold on.
Yeah, my takeaway for this would be, one, the pound has been an awful mean reversion trade in general. The stats have been bad for both environments. 2, in low vol environments, you've been able to get some mean reversion relatively quickly in a few of those pairs. In the commodity currencies and that yen, you can wait a little bit longer. It seems like you've been able to. that is, not indicative of future results. There you go, TJ. But in high vol environments, it is interesting to see that those time horizons can kind of get kicked out. You probably have to have, it makes sense, you have to be able to take a little bit more heat in high vol environments. You have to be able to take a little bit more time to probably see that mean reversion that you want, whereas it could be a little quicker in low vol, and the pound is just not a great mean reversion trade the last 6 years, no matter how you look at it.
Agreed. So your key takeaways here is that underlying thesis, low volatility does not mean across the board U.S. dollar pairs are always more likely to mean revert, but we do see Australian dollar, U.S. dollar is the most mean reverting pair by far when volatility is low. Similarly, you're seeing win rates in Euro, CAD, and Swiss franc only above 50% when volatility is high. In low vol environments, that less than 5-day trade exit generally holds up better, whereas in high volatility environments might take a little longer.
Do you want to pull up the platform and show people how to put on? Why don't we just pull up Aussie, put a Bollinger Band on it, and kind of show people what the heck we're even talking about?
Yeah, that'll do it for
numbers.
the slides, and we'll hop into the platform here. Taking a look at our mover of the day is the Australian dollar. Here, looking at the hourly chart, coming off of
so classic, just
some new highs.
Just got up close to a new high and just getting annihilated as we speak. The most classic Aussie thing that we could have seen.
So yeah, here flipping over to the daily chart, what we can do is you can add Bollinger Band right here from the indicators. Does this require any more setup? No, because we're already looking at 20-day periods with 2 standard deviation. So play with it if you'd like, but for the study's purposes, full times here would be an example of trade entry right here. Took 1, maybe 2 days to get back into that range, but did.
Pretty quick, yeah.
It's over the past, since this, here's where these bands tend to widen out in reaction to this huge move. But since May, really pretty tight bands and not straying far from this range. Pretty sticky to this Bollinger Band.
Yeah.
So that would be your validation for that study, at least historically.
Cool. Well, yeah, let's see if we get a move up to 66 or down close to 64, because that's what the bands are showing us right now. Hopefully we get some kind of move and we can try to test it in the future. Nice study.
Thank you. Economic calendar today.
Oh.
Not much, but we've got some Fed speakers. That's sure to rile some people in the office up.
Of course.
Maybe they'll say something notable.
That guy's name looks like Mausoleum. Maybe there's a joke there, or like Museum.
Waller, Wall Street.
Yeah. John Daly's speaking at 1:30. You're too young for, you don't know John Daly?
I know John Daly.
Okay.
Late night.
Let's get out of here on that. Wait, late night?
Just kidding. Golfer.
All right, that's it.
All right, that'll do it here for us today on Forex Focus, but a lot ahead on Tasty Live, so stay tuned for Tom, Tony, and Vanetta up next.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. You want to reach out to me, you want to talk to JJ, it doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Woo! Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Thursday to you both.
Hello.
Hola, Sosnoff. How are you? Very casual today in your semi-see-through yellow shirt.
What is this?
Wait, what is it? You do this. What are you trying to do there?
Just showing off the guns.
Is that what that is? Is that what that is?
You don't lift at all, bro.
You don't know what I do.
Yeah.
In fact, I do know.
He lifts himself out of bed.
Barely.
I gotta lift.
How'd you get home yesterday?
What do you mean?
How'd you get your car?
Yeah, because you had to walk up the stairs. The elevator's out again.
Walking
4
upstairs
flights.
is easy for me. It's downstairs.
Walking up is easy. Down is hard.
Oh yeah.
It's a lot of stairs.
It's a beautiful staircase. I had to do it today. It's absolutely gorgeous.
No, you think you're gonna get murdered.
No, it's big. It's spacious. You can live in there. Usually, it's just like a dungy little dark.
No. It's really
wide.
a nice staircase, but
wide.
Yeah, well, you guys can tell that you are not a woman navigating it by themselves. You're
Beth
like,
did say she would turn around and watch if anybody was behind.
Yeah.
it sucks walking up and down 4 flights of stairs.
Well, I've only walked down. I'll see how it is.
I'm not happy about it.
But did you park on the same level today, or did you park lower?
No, I parked on the same level.
So you didn't learn your lesson.
It's not a question of learning lesson. I thought they'd have the thing fixed in a day.
No, I think it's like massive, just flooding damage. Like you can see.
Oh, they got the blowers downstairs. You walked right by them.
Yeah, all the engineers are all the like. That's what all the service trucks are in the garage.
Came up through the sewage, you know.
Yeah, I don't know.
Vents, yeah.
I don't know.
Yeah.
I don't know, but I'm not happy.
Well, I'm not happy because I hit legs yesterday and my legs hurt. My legs hurt.
Oh,
So it's gonna be. It was okay going down the stairs, but going up the stairs, it's gonna
Going up
hurt.
the stairs is easy. Going down is
Yeah.
It's the pounding going down. Is that what it
the
is?
pounding.
Yeah.
Also,
But you're supposed to hold on to the railing at your
also I
age.
like to.
Oh, he holds on. Believe me.
Yeah.
You take one step with 2 feet. I mean,
Also, I like to leap sometimes.
yeah, like a lemur.
So you're gonna do the race to the top of the Hancock this year, then?
I could go up easier than I go down.
That's 95 flights
I
to.
didn't say I was going to do it.
Okay.
I could do 5.
You could do 5.
I could do 5.
You could do 5.
Probably 10.
Yeah, actually, we went to the old studios. By the way, I don't know who they got. I got to get those people to clean my house because they swept that thing. It was like a crime scene that they fixed better than any movie. I mean,
I agree. I couldn't
that
believe
place
how clean
was
it was.
spotless. Anything you left in there is gone. Okay,
That's fine.
Not there anymore. I mean, it was out of there.
I saved a picture of the 3 of us.
Aw, that's nice. Memories.
He now has it hanging in his bathroom, I believe. Right? Where do you have it?
I have it next to your seat out there.
Oh no, I moved it. I moved it down on your end.
Oh, that's nice. That's
And
nice.
Liz and Jenny. A couple others. I took the one to Christine, a couple others.
Did you take your light fixtures that you wanted?
No.
No.
I do want them, but I have no place to put them.
Right, yeah.
Those are expensive.
You gotta put them somewhere. You can't put them in the coffee shop?
Actually, when you sell a building, the light fixtures, unless you specify that these light fixtures are not part of the deal, are part of the deal. You can't take the light fixtures.
It's okay. I don't want them.
You said you wanted them. I'm saying you can't.
I do want them, but they're not.
They were part of the deal. You can't take them. Like a painting, a drawing, or something that.
How about the couch?
The couch you can take. Couch you can take.
You load it up for me?
I'll do that right now. Let me get on that.
You don't have anywhere to put it.
I know.
You should put it on the back wall of the studio here, and then that way.
Hang it.
Yeah.
Hang it.
You could just make like a little cozy spot, like a nest.
Hang it.
Hang it. Yeah, there you go.
Mm-hmm.
Hey, are you gonna watch the All-Star game? When is that? Soon? Yeah. Baseball.
Games. I don't even know what they are.
Baseball, the All-Star game.
Oh, All-Star. I'm sorry.
Yes,
I didn't hear
the
you.
words that are coming out of my mouth. Yes, the All-Star game.
Is it this weekend?
I'm not sure. I thought you would know.
Ooh, good question.
Look, dude, I'm just trying to make conversation before it grinds to a halt here.
I actually don't know when the All-Star game is.
Okay.
All-Star game date is July 15th, Tuesday.
Oh, okay. Yeah, so it's coming up.
Yeah.
You can watch the home run derby before
I don't
that.
care about the home run derby. Well, we need the All-Star break here because the Cubs are
Well, the wheels are falling off for the Cubs.
horrible the last 2 days.
Yeah. Because you weren't there
Right.
to cheer them on. They need you.
I know they lost to the lowly Twins.
The Twinkies. Always like
Well,
that.
it's a long season, so that's why like no one's head gets too big because there's a lot of